5 decades equals proof that clients need you as their advisor. Understanding that each decade has been dramatically different in the stock market creates the opportunity for you to sell your value with the consumer. Hey, welcome once again to The Rare Advisor. In my last discussion with you, I talked about the fact that spring has sprung and advisors and clients are on the move. Most specifically meaning those who were not well taken care of during the pandemic are shopping for new relationships with new advisors. And that either is a huge opportunity for you or it puts you at tremendous risk. It all depends how you've handled the pandemic. So I would stress once more, very, very briefly, let me just say, if you did not stay in constant good stead and contact with clients during the pandemic, if you did not reach out through digital and media and various other resources that we had under lockdown to communicate with and maintain the experience with the client, if you did not do that, you need to button that relationship up in a hurry because those clients are currently shopping for new advisors. And we're seeing that this move is starting to take place. And with that, we also ask the question, what is the next decade going to look like following the pandemic? So in the market, in the stock market, for your portfolios, for everything you're doing in the financial plan with the clients, what's the market going to look like during the next decade? We don't really know, but what we can do is we can talk to clients about what previous decades looked like, and we can have a great conversation about what does that mean to them in their psyche. What does that mean to them in terms of their ability to accept risk? What does that mean for them in terms of how aggressive do they want to be to accumulate in the future? Depends on their age. Are they retired? Are they pulling retirement income out? Do they have years to go prior to retirement? Are they still in accumulation phase? All of these things come into the equation, but most customers have such a short bias in terms of their memory of history and what's happened in the market that if you don't periodically take them back and show them what the different decades in the market look like, you can lose them very quickly. And then they'll be disappointed because they'll think the portfolio didn't do what it should have done or who knows what. But you need to have these discussions and set these expectations so that you now are building a plan based on your client. You're not building a plan that's chasing a return, chasing an index, trying to keep up with the market or all these other things when that's not the number one priority. Now, if it's just pure out accumulation and all they want to do is passively invest and ride it out, that's a different story. But most clients, if they're a customer of a financial advisor, that's not who they are. So let's just take a quick look at what I'm talking about here with these different decades. So here we start off. Look at what's happening from the years 1970 to 1979. We start right here, we end right here, and we have ourselves a wild ride in between. Then we come over to the 1980s. Remember Black Monday? Although it still looks severe, it doesn't look as severe as you probably would remember it, and yet oftentimes clients forget the fact that the S&P 500 had a very good run during the 80s. In fact, even in 1987, the S&P 500 basically started the year and ended the year within just a point or two of itself. And so the market was very different and changed dramatically during that period of time. But then look what happens in the 90s. Now we take off, right? We have a great upward market. This is when Vanguard and the passive money promoters really took hold in the marketplace, because when people looked at the 1990s, their response was, well, if that's what the stock market looks like, why do I need to pay for financial advice? I'm just going to invest passively. And that worked really good until the next decade. Because right after that, in the year 2000 to 2009, look what happens. The lost decade, right? What a roller coaster of a ride. Imagine if someone walked in your door right here in the year 2000, January 1 of 2000, and said, in 10 years, in 2010, I want to retire. What do you think will happen to my account values over that period of time? And all of a sudden, here you are, you're passively invested, and you actually lose that money over that 10-year time frame. Probably not what folks expected. And then here we are back to 2010 through 2019, and we see another nice run up in the market. And who knows where we're going to go now for 2020, 21, and beyond with the pandemic moving into the rear view mirror from a market standpoint, but it has shaped and changed the stock market for who knows how long. In fact, probably just permanently is the best way to say it. When will people ever quit communicating the way we're doing this right now? Are people ever going to truly travel for business the way they used to? What different product lines literally do not exist anymore after the pandemic? And what product lines are new and unique and different that now exist because of the pandemic? What businesses are going to thrive in the future because of this? Which businesses are going to shrivel up and die? If they haven't already, they still are going to in the near future. All of these things are going to impact the stock market, not to mention presidential scenarios, not to mention global economics and everything else that's going on. What will this next decade look like? And that's a great question for your customers. What do they think that next decade is going to look like? Because that's going to help you determine what kind of risk management you're going to put in place in their portfolio. Now, you probably have a pretty good idea of how you want to guide that conversation, but you need to get them to think and understand what kind of risks are involved. The wild variations over the last 5 decades, decade by decade, is a great pictorial to explain to your clients the need for you to be their CFO, the need for you to be handling risk management for them, to be developing their plan for them. It's a beautiful time to be a financial advisor. Take advantage of it.